Welcome to this fingraphs.com year-end review. We will review the long-term trends currently in place on a variety of assets. Let us start with currencies. This is a weekly mosaic on fingraphs.com with euro-dollar, cable, dollar-yen and dollar-Swiss. As you can see, the euro-dollar is still in a long-term downtrend and has the possibility over the next few quarters to make it down to parity. On cable, it is also still in a downtrend and does have a bit more potential, possibly into the low 140s. Dollar yen is still heading up. It is a very extended target, impulsive too, but it does show us the possibility to make it above 130 over the next few quarters. Finally, dollar Swiss is still also heading up and possibly into the new year, into the first few quarters of the new year, up to 105. Let's now look at a few crosses. Euro Swiss is still in a downtrend. The correction up has been quite resilient. This means that it is now neutral and shows no targets. We would really need to make it above 110 to create an uptrend here. Until we do that, we are still in a long-term downtrend on Euro Swiss. Euro cable is still heading lower, but has reached a certain level of exhaustion. We have seen that the potential down on cable is probably more important than on the euro, hence this exhaustion here. Euro yen is still in a correction down and has pretty much reached its corrective targets. We may now expect, or we could expect, euro yen to restabilize to the uptrend in the first quarters of the new year. Australia, New Zealand, it seems like the carry trade is pretty much exhausted and it's pretty much a neutral situation now with an impulsive down done for this pair here. Now let's look at other FX. So the Chinese yuan with the rate cut is still moving up and we still have some potential over the next few quarters of next year. The commodity as well as all the oil currencies are still pretty much weak against the dollar. We see a bit more potential, at least still a downtrend on the Australian dollar, a bit more potential on the New Zealand dollar, more potential for the dollar against CAD, against NOK, against the Russian ruble, against the Brazilian real, as well as the Mexican peso. These trends are all quite extended. So they could be coming to exhaustion in the first quarters of the year. Yet we don't believe they are quite there yet. Now let's go on to rates and look at benchmark government bond rates for the 10 years. So rates are going up in America, but here we're actually looking at long-term 10-year government bond rates. So they are more a proxy of inflation and growth expectations. At the moment on our weekly charts, they are all, that means US, Germany, UK and Japan, still in a downtrend. So we do have to move to our daily charts to see a reaction up and possibly in the US and in Germany. It's pretty much neutral in the UK and still heading lower in Japan. So at the moment we'll still be quite defensive on a very strong rate increase over the longer term end of the spectrum. Now why is this? Well, maybe there's still some uncertainty on the growth perspectives. So let's now look at a few other bond ETFs and we'll look at the iShares for 10 years US government bonds, the iShares for corporate bonds US, the iShares for high yield bonds, as well as the iShares for the inflation protected bonds. And these weekly long-term charts show that the strongest one of all these is still the 10 years government bonds, and it is still considered the most safe. The corporate bonds have been correcting and do run the risk of making it below their corrective targets down, which could trigger a sell-off. So there's some risk here in corporate bonds. High yield bonds are heading much lower. They have gone quite aggressively down and the move doesn't seem finished yet. What is also important and interesting is to see that the tips are not moving, which means that people are not seeking very much inflation protection. Now let's move on to commodities. And on commodities, we could see that gold is still in a downtrend. It has almost reached its targets. It may start a reversal in 2016, but at the moment we're not quite there yet, and we'll still be quite careful. What is interesting is that copper, which could be a proxy for growth in the economy, has followed gold down and is not showing any sign of reversal yet. So that is also quite a defensive stance at the moment. Then Brent is still in a downtrend, so oil is not sold off quite fully yet, and we still believe that although the impulsive targets are done here, that we may see a bounce, but that the long-term downtrend on Brent is not over. Finally, on agriculture, there's a lot of talk about El Nino and about a rally in soft commodities and agricultural commodities. At the moment, it is still in a downtrend, and we don't see much sign of that bounce yet. Now let's go on to equities. And first of all, US equities. We could see that the S&P is still heading up. It's pretty much exhausted with impulsive up done, but the trend is still in an uptrend. This is not the case anymore for the Russell 2000 ETF, as well as the Guggenheim equally rated S&P 500 ETF. So there is some deterioration in the structure of the market. Yet it does seem that the strong drivers that have been behind the Nasdaq 100, namely the FANGs and other internet giants, are still holding the market and are still showing quite a lot of momentum. They are still in an uptrend, and this uptrend doesn't seem quite over yet. We believe that it could continue in the first months at least of next year. Now, going on to Europe, European indices, we can see that both the DAX and the Dow Jones stocks have corrected quite aggressively since the spring. Yet they are still in an uptrend, and this correction down may deliver some opportunities for a new up move in the new year. We're a bit more concerned about the FTSE 100. Please remember that there's a lot of mining and oil stocks in it, and at the moment it has broken through its corrective targets down. Although we think these targets are very aggressive, we do believe that it does show that there is some weakness in the FTSE versus the other European markets. For the Swiss markets, we are correcting down. There's probably a bit more to go, but that could be a good position to buy the dips and surf a new uptrend into the new year. Now on Asia and emerging markets, we look at Japan. Japan is still in an uptrend. It's pretty much exhausted as in the US, but Abenomics should help us continue this trend at least over the first few months of next year. Shanghai has corrected quite aggressively last year. It is attempting a new uptrend, which is labeled as a correction for now. If we just zoom onto it, it would really need to move into an impulsive move on our daily charts, which means above 4,350 to really reinitiate a strong uptrend. Yet, this is a constructive situation that we are considering. Now, looking at other emerging markets, they are still quite aggressively down in a long-term downtrend that could lead them lower into 2016. Australia has corrected, has come into its corrective targets, probably a possibility to buy the dips here with a stop loss below these corrective targets. Now going on to the sectors, we're gonna first look at early sectors and interest-sensitive sectors. We're looking at the financials. The financials, surprisingly, despite the rate hike perspective in the US, and these are US sectors, are still consolidating. If confirmed, the rate hike and the perspectives of growth next year, we should be able to see these rallying again, but at the moment it's a bit too early to position oneself. The sectors which have been positive this year, some of the rare sectors that have been positive this year, consumers and technology, are still showing uptrends and some potential up in the new year. Industrials, which have failed to confirm the growth story last year, are still correcting down, and we think we still have to be careful there, at least over the next few months. Moving on to the commodity space, we will look at materials. Materials are still heading down. They just broke through their corrective targets. These targets are maybe quite aggressive, but they certainly show some weakness versus the other sectors. The gold buck index still very much moving lower. It is now possibly 80% down from its tops, yet liquidation could bring it down below 90%, so we'd still be careful here. On the energy sector, we're still moving lower. There's still some potential down, and we're not yet oversold yet. Interestingly enough, alternative energy has only seen a correction and may find some support in these corrective down target zone. So there might be an interesting arbitrage between the global energy and the alternative energy sector. Finally, we move on to the defensive sectors, and staples still heading up. They have been one on the consumer side, on the second side quite defensive in this overvalued market, but they should still see some momentum into the new year. We've seen some profit taken on biotechnology, which has also translated into healthcare. The healthcare sector in general is still in an uptrend, yet we would be a bit patient here to re-enter it. With interest rates deemed to be rising next year, the utility space is correcting, and this would not be one of our favorite sectors next year. And that's all for our perspective for the beginning of 2016. We wish you all the best for this new year. Many thanks. Bye-bye.